Hey everyone, Steve Fernandez here with this week's edition of Market Insights. I want to talk to you about the global energy crisis that we're all feeling. If you've been at a gas station or recently checked your winter heating bill, you know exactly what I'm talking about. And with every conflict, with every crisis, comes an opportunity. And in this case, there's a huge opportunity to profit from the global energy crisis and also just the evolution of the energy market over the last couple of years and really the evolution that's going to continue into the future. So before we get started, if you haven't already, if you're a viewer, you're coming back, subscribe. If you're new to the channel, subscribe. It helps us grow our content and give you that content every week. Let's go ahead and jump right in. So I'm sure you're following the Russia situation. Right now, we're seeing a huge shakeup in the energy markets, mainly because of the economic sanctions that we've seen. With the economic sanctions, Russia is not really able to trade with other countries. They've been removed. Some of the banks have been removed from the SWIFT banking system, which practically eliminates their ability to transfer or trade with other nations or companies. Now, does the U.S. really get directly affected by Russia? Not really. Russia accounts for about 3% of oil supply in the US. They don't really supply any natural gas in the US. But with the entire world affected here, it really will put a supply crunch on the oil supply, gas supply. And this was already a tight supply when you think about it. So the crisis we're seeing in Russia, that conflict has amplified the situation. I mentioned there has already been that tight supply. That was mainly because of that COVID demand wipeout. Basically, all demand was eliminated because of the COVID shutdowns. Energy suppliers had to cut supply to stay afloat. They did a good job, but they were reluctant and have been reluctant to bring back supply. They're just sitting on the sidelines pretty much with limited supply, enjoying the price appreciation in the commodity. And, why change? They're all growing income, so I'm sure they will continue to do so. Now, the global governments are really saying, hey, we don't want to limit global energy supply, but we want to limit the export of refining technology to Russia. So on one hand, you have the US government and global governments saying one thing, but their actions are saying the other. So it's more of a watch what I do, not what I say moment. Also, the US and 20 other countries pledged to cut off financing for most oil and gas project overseas starting this year. So again, what are we saying versus what are we doing? What we are definitely doing is prioritizing clean energy spending. We saw over 900 billion last year in 2021 in terms of investment. And you can see in this chart that number has been climbing every year essentially, and that should continue over the coming years. So how should you play this? How should you play the tight supply in the energy markets, the crisis in Russia? Well, the first thought is, well, I'll buy oil companies or I will buy an oil ETF. Well, there might be some upside in the short, maybe even the medium run there, but generally supply and demand normalize over time. And the chasing of oil prices has proven to be a very tough trade. Back in 2008, we saw oil surge to $140 a barrel. We're at about 110 right now. So I'm not an oil and gas expert by any means, but simply by past prices, that you could see some upside there. But again, it was a tough trade. In 2008, when it touched 140, it was back to $40 within 6 months. So a 70% decline in oil prices in just 6 months. So a really tough trade there if you're coming in now. Obviously, if you bought into oil back in the COVID shutdown when everybody was fearful, you'd be sitting very fat right now. But I think the better idea is to buy into where the money's going, and that is renewable energy. I'm most excited about solar energy. A couple of reasons why, and I think this crisis amplifies these reasons. Well, with solar energy, you're not actually dealing with an energy cartel, right? We're not dealing with Russia. We're not dealing with Saudi Arabia. We're getting energy from the sun. Granted, we still need materials, that is components for solar panels or solar panels to obtain solar energy. So we're still trading with other nations, but it's a little bit harder to control for other countries to really bully it's hard for countries to bully other countries around when it comes to energy prices and energy supply. So I think that's something that will be amplified here with this recent Russia situation. And also, when you look at the EV transition and the electricity that's going to be needed for cars, well, why would you want to be on the oil side of things when you could be on the electricity side of things? Right now, about 50% of oil is used for motor vehicles. And Ian King and I, we're on the camp that electric vehicle sales will really be probably 90% by the end of the decade. And that's substantially higher than estimates of about 50%. But when you look at the momentum that we're seeing in that market, 9% of vehicle sales last year were EVs. That's huge. I expect that we will see that upward momentum continue. So you're dealing with a technology in solar that can get electricity essentially from the sun, and that technology is getting cheaper over time. We've already seen a 90% decline in solar panel prices over the last decade. Now, it's hard to know where solar panel prices are going to go in the next couple of years because that's really entirely dependent on the semiconductor market. Solar panels are rich in semiconductors, so we've talked several times about the semiconductor shortage, but generally speaking, technology gets cheaper over time. So you don't want to fight the government. You want to go, like I said, where the money is going. And obviously the money is going into renewable energy. It's going into solar. So if the government is going to continue handing out tax subsidies to consumers and corporations, you have to assume that more and more spending will be going into solar. And you can see in this chart that solar capacity has increased dramatically, really over the last 10, 12 years. It's up 22 times since 2010, and it's expected to nearly 4x, so quadruple, by 2030. So the money is going into solar. That's where the investment opportunity is. It's my favorite way to play this clean energy transition, but also the crisis that we're seeing now, I think will amplify that. And it really kind of highlights the energy market problem that we have. We're really dependent on other nations. The world is dependent on other nations. Why not be dependent on the sun? Why not be dependent on technology? So to get exposure to solar stocks, I would recommend the TAN ETF. That's the Invesco Solar ETF. It's a basket of solar stocks. So it's going to give you diversified exposure to that market. We've seen now that if you're really coming in late, like you came in after the election, you're sitting at a loss in the solar ETF. But generally speaking, the solar ETF is really just consolidating to where it was before the election. Obviously, with the Biden administration coming into office, they were really high on the renewable energy shift. So we had a ton of optimism around that, and that led to parabolic prices. We're seeing that consolidation back to where it was before the election. So in my view, that's not a bad thing, considering that the market has been relatively weak recently and solar stocks are still where they were before the election. I think that speaks pretty highly of the strength in those stocks. The market just might not see it that way because we're very short term in how we view our investments. So TAN, T-A-N, is a good opportunity to get exposure to solar. And that's going to do it. Thanks for tuning in to this week, and stay tuned for next week.